Yeah, hi, I'm Luke Alexander, President and CEO of Newcore Gold. Newcore Gold, we're advancing the Enchi project in Ghana. It's a district scale exploration project. We do have a 1.4 million ounce resource that we've outlined, but the real thing that we're excited about at Newcore is the 90,000 meters of drilling, which we're currently doing. That is the largest ever drill program on this project, and we've been putting out a number of very positive results over the last year and a half.
Yeah, Luke, good to see you again. Obviously, just before Christmas, wanted to catch up, and we just saw the press releases. Wanted to understand them a little bit more in terms of what are you going to be doing this year, right? 1.4 million ounces, it's not enough. When's the next resource update coming up?
On the back of us completing the 90,000 meters. So if you look at all of the results that we've put out to date, it's about 70,000 meters of drill results. That leaves an additional 20,000 meters, or roughly 20% of the overall drill program. We will get those out over the next 6 months or so as we complete the drill program. And then on the back of that, at the end of this year, we'll look to get a resource update done.
Okay, but you know in your mind what you've got to be aiming for. To get noticed, it's got to be 2 million ounces plus. Confident that that's going to happen, or do you have enough data now?
So if you look at all the historical RC and diamond drilling that feeds our current 1.4 million ounce resource, you're looking at about 76,000 meters of drilling. Of the remaining 70,000 meters that did not get included in that resource update, about 40,000 of that would feed into a future resource update. The other 30,000 meters is targeted on new areas, greenfield targets, as well as some previously drilled areas that we're looking to advance and show that they will become resources at some point with additional drilling, but that won't immediately feed into a updated resource. So if you look at that roughly 40,000 meters of drilling in relation to the historic 80,000 meters, you're looking at pushing somewhere around 2 million ounces, I would think, for a future resource update. So that's real back of the envelope type stuff, but that's kind of what we're looking to push towards. And then we would look to obviously continue to aggressively drill and start to push that towards 2.5, 3 million plus ounces with additional drilling.
So let's look at that. You put out a couple of press releases, one mid-Jan and one just yesterday, actually. We'll get into the numbers in a second there, but you talk about a second parallel system. Does that change the where you're going to be drilling component of this? Because if you want to get to 2 million ounces, a bunch of infill drilling, please, right? Or you do expansion drilling. So what's it look like going forward?
So one of the real advantages we have in Ghana and at our Enchi project is we're getting assays turned around in about a 3 or 4 week time frame. So as a company, we're constantly prioritizing and reprioritizing where we're drilling. If you look at our 212 kilometer land package, we've identified about 25 targets across that land package, of which we've only to date drilled on 7 of them, and 4 of them make up our current resource. So we're constantly, reprioritizing where the drilling goes based on success. The parallel structure that you're talking about is something that we're obviously very excited about. It's right at the southern end of our Sium deposit, which is our largest deposit, about 725,000 ounces. Right down at the south, it's an area called Sium Extension. We had done a bunch of soil sampling to the east of that discovery. We had some airborne geophysics, which had been done in that area. We drilled it for the first time before Christmas. We got the results back, which highlighted, 26, 27 grams over 1 meter, basically from surface, 6 grams over 6 meters. So that was something that we were very excited about, needless to say. And as a result of getting those results back so quickly, the rig was still sitting there. So we put another half dozen holes into that area and now have kind of proved up mineralization in about a 500 meter area sitting again to the east of Sium Extension. in between the two of them, it remains open. One of the things that's quite interesting is when we were putting one of the drill roads in, we actually hit an area that at surface has 5.5 gram material. So needless to say, we are going to drill in between these two areas and see if there's additional structures there as well. To the north of this new parallel structure that we've identified, we're drilling a greenfield anomaly or target called Tokasea. This is an area that has a past producing mine on it, underground shaft that dates back to World War I. It's got an open pit sitting there that again dates back to World War I. So we're drilling right through that entire area. And this parallel structure, our current geological interpretation is that it actually could potentially be the southern end of our Tokasea target. So if that's the case, it's something very exciting, and that essentially would sit directly to the east of Sium, which is our largest deposit at 725,000 ounces. So it reiterates what we've talked about before, Matt, which is, the Enchi project truly is a district scale opportunity, and we're going to continue to make new discoveries. And as we make those discoveries, we then go back in and reprioritize our drilling to look to start moving them towards resources over time.
Okay, so lots of targets, lots of areas that expansion drilling that you're looking at, but the goal for you has got to be getting this resource update being plus 2 million ounces. And the reason I say that is that the market is changing. There has been some M&A activity, but the other things that are going on here is inflation is happening, costs are going up. There are time delays on all sorts of shipped products. Costs across the board. If I talk to developers, producers, they are nervous about this one. They're adding like 15% to their cost base, right? So in that context, it's a slightly different world. Gold price is good. You're an explorer at the moment, but to make yourself attractive, you're going to have to work out how you play the market too, right? We've talked about the markets before. It's like, has that side of things changed any in terms of how much money you spend, how quickly? Do you try and do things quicker? Do you try and slow things down, preserve capital? How's it affecting the conversations at board level?
From the beginning, and if you go back to the first interview that we ever had, or if you go back to when we, relaunched the company and I came on as CEO, we laid out a vision and at that time and a strategy. And that strategy has always been to build this to a 3 to 5 million ounce resource. The reason we talk about 3 to 5 million ounces is at that point, you're looking at 200,000 ounces of production over a 15 to 25 year mine life. If you look at mid-cap and major companies out there, that's essentially what they're looking for, is enough size and scale to really justify, potentially acquiring a project. So that remains where we're focused on getting to. And with the 90,000 meters that we're drilling at the moment and additional drilling that we're going to do in the future, we think that's very achievable and something that we're excited about. So that remains the focus for us in terms of overall strategy. Yes, you constantly have to reevaluate, in terms of how you approach getting there. And a big part of that will depend on the market and, where we're trading, from a market cap perspective, taking into account dilution. Also looking at things like, does it make sense to put out a resource update before adding additional drilling? Or does it make sense, given all of the success that we've been having, to just keep drilling? So these are all the things that we constantly discuss, but the overall strategy and vision really hasn't changed. And I think that's important because, lots of companies will go out there and just start drilling, don't have a strategy. Whereas we've really outlined a strategy, and it's something that we've stuck to. And I would encourage anyone to go back and listen to the original interview that we had and see if that's what I said.
It is. So, I did.
It is kind of the focus.
I did listen to. I've listened to them all in preparation for today. You are sticking to what you say, but here's a question for you, right? So again, this whole market dynamic at the moment is fascinating to me because there's a disconnect between what the gold price is doing and what equities are doing, and the way that people are. Normally you and lots of others say gold investment, safe harbor. In times like this, you go for gold. They're not doing that, right? They're distracted by other things or nervous about other things. So likewise, you guys get affected by that, and your decision making gets affected by that. Spoke to a couple of CEOs in the last 2-3 weeks, and they're saying they're delaying putting out a PFS because you're having to put some real numbers on a project, and if the market doesn't understand it, you're in a bunch of trouble because the increased cost, the inflationary cost, the price gouging that's out there for lots of reasons, costs are higher than perhaps the PEA indicated. That's happened to CEO we spoke to earlier this week. His PFS is 120 million more than the PEA numbers suggested. Now that's because he's doubled the size of his project, but no one looks at that. No one looks at that. So you know, it's a very careful balancing act between that message that you get out in the marketplace, and therefore you've got this nervousness around actually putting out PFS and delaying it. It's just, well, let's just keep drilling for a bit until we understand how the market plays out. So again, is that affecting your decision making? Again,
back to the overall strategy. Our strategy isn't to put out a PFS at this stage. And again, go back to previous interviews, and it's consistently been the message. What we will do is, as we grow the overall size of the resource, we will continue to put out PEAs, so economic studies that underpin the value of the company. If you go back to the PEA that we put out in June of 2021, our stock actually moved up 15 to 20% on the back of that PEA. I think it was a real fundamental recognition by the market of the value that we're currently sitting on today. But the message at the time, and I think we might even have an interview, that's a data point in time, and really the additional 70,000 meters that didn't get included in that PEA is what we're really focused on as a company. And that ultimately hasn't changed from that perspective. And that's what we're continuing to focus on, is growing the resource. Yes, we'll put out updated PEAs, but the day we put the next, PEA out, it'll be stale dated because we'll probably have another 50 to 100,000 meters of drilling that we're in the midst of. But what it does do is it allows the market, it allows you and other investors and analysts and investment banks to, look at those numbers and look at what the fundamental value is for the company at that point in time. If we look at our PEA from June of 2021 at an $1,850 gold price, which is in and around where it's trading today, you're looking at an after-tax NPV of $302 million, after-tax IRR of 54%, under a 2-year payback. So that's a real fundamental underpinning of value relative to the $45 million US market cap that we're trading at today. So, But I guess that's where I'm going at, Luke, is the PEA is plus or minus 30%, right? And the numbers you just thrown at me, you need to firm up on all of those things, and that's my point here. Is like we know where you're going with 2 million ounces, and then it's a case of then what? Because I understand no plans at the moment for a PFS. Drilling this thing out can be very attractive to industry partners because they just look at the drill data, right? They don't need you to do a study to help them understand what it is. They'll work that out themselves. So is that part of the thinking here, knowing that you're going to probably do an interesting, you're not going to want to raise money to build a mine, but you do want to make it very, very attractive to a number of suitors, have the competitive tension, because the jurisdiction Ghana is a good one. I think you would argue, and I would agree. I think, fundamentally, if you look at the team and the track record, a lot of the group does have a track record of building mines, being involved in producing mines, all the rest of it. So anything that we do is moving towards a production scenario. And with the deep-pocketed, investors that we've got, putting this into production will be an option, and is an option for us. So that is something that we'll continue to do. I mean, one of the things that we are looking at internally is if you look at our 1.4 million ounces today, about 85% of that sits within the oxide. So it really is a heap leach project today. As we start to drill deeper and start to discover more sulfide ounces, one of the things we will do is look at, okay, a heap leach option, tank leach option, as well as a milling scenario. And we'll look at, the trade-offs of all of those. Obviously, tank leach and milling require more CapEx. So then you start to need to look at, well, with 80% recovery in the heap leach versus a 92 to 95% recovering in a milling scenario, what's the additional NPV? What's the additional kind of benefit for the project of going directly to that? Or is there a scenario where we start off with a heap leach project, use the significant cash flow from that to then fund, an expansion as we get into the sulfides? Because the reality is, when you look at the depth of our oxides of anywhere from 20 to 120 meters, it's multiple years of mining before you start to need a mill and getting into the sulfides. So that's all work that we're actively doing internally and looking at all those different scenarios. And that's something that we'll continue to do. I mean, if you look at Toronto, again, 50 kilometers to the north of us, they originally were looking at 13 open pits. As they made the higher grade discoveries at depth, they went directly to a milling scenario. So we're looking at all those things and analyzing those as we go. And those will then feed into future economic studies that we put out.
Whether you're going to build this thing or not, you've got to say that you are, okay? We all understand that. You've got a clever audience here. They know that. But you are in charge of signaling to the market what your intent is. Not what you say, but signaling to the market. And surely getting through the study process and getting this thing, you've got this ore body, these oxides sitting at surface. That's cheap, quick, easy money. And showing that intent to get into production, get into cash flow quickly, surely is something that you can signal by delivering the study processes. But at the moment, you're saying PFS is nowhere in sight. We're going to keep drilling this thing out to a certain scale. And that says to me that you're, talking to the industry players and say, look, come and get us. Look what we got.
In terms of, if you look at the 90,000 meters of drilling, I mean, this is more drilling than has ever been done on this project over the last 30 years. So needless to say, we're collecting a huge amount of data with all of that drilling. So with all of that data that we're obviously collecting and those results, we're continuing to, formulate a view in terms of the best way to push the project forward, so on and so forth. So what, is going to be required is additional drilling, all of the data that we've collected, all of the information, feed that into updated economic studies, which then ultimately maximizes the overall value of the project. So that's all the stuff that we're going to be doing. And as we do that, without a doubt, you want to be talking to industry players. You want to be talking to retail investors. You want to be talking to institutional investors. All of those different investors, and even within all of those different investor silos, let's call them, they've all got different kind of focuses and approach and what they're looking for in terms of an investment. So it really is kind of balancing all of those different things and making sure that at the end of the day, you're keeping that project and keeping the Newcore story in front of as many groups as possible to ultimately maximize value for shareholders. So I don't know if that covers kind of what
it kind of does. Look,
we are kind of talking to all the different groups out there.
Of course you are. You've got to keep your options open, but there's also, a kind of commercial imperative to be as efficient as possible with money, and time is money. And I don't mean that to sound flippant, but there's a cost time component to this in terms of what you do with your money and how quickly you create value with that money, right? So if if you do keep drilling, if you do go and raise more capital for more drilling and you're not rushing to a PFS, then that says you're one type of company versus, well, actually, I think we've got enough data to get a mine going here. So we will, go down a different route. And those signals in the market will attract different types of investors in some of those silos. So I'm intrigued to see, because you still got lots of options out there, I'm trying to see how you play that this year, because there's some big moments for you.
So I think once you start to look at PFS and obviously a full, bankable feasibility study, from a signaling perspective, at that point, you're signaling to the market that, we've kind of done all the exploration we can, and we're looking to move this towards production because we see less upside from an exploration perspective than we do from a build perspective. Given the amount of targets that we've got, given the success that we've had from a drilling perspective with this 90,000 meters, given the fact that our current 1.4 million ounce resource only averages 63 meters in depth, our view is that there's a lot of upside to continue to drill and not start to pigeonhole us as moving towards production. And that's where, with this 90,000 meters and additional drilling, we think we're going to continue to unlock a tremendous amount of value.